Good afternoon, everybody. I'm Dan Hussey with Zaner Hedge, bringing you a strategy of the day update here for March 12th, 2024. On the row crops, we're going to be taking a look at corn and soybeans in a little bit of detail today. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. Let's begin today with corn down a penny right now, and really flipping the script for what had begun as, generally a more bullish looking day. You never like seeing markets get back in the green, but nevertheless, it is still higher highs and higher lows. And, you never tend to get more than 3, 4, 5 days in a row of a particular color of candle without getting, one to retrace that, right? So a little bit of sideways price action here, still flirting above, 7-day, 18-day, and channel support. Nothing suggests that right here, right now, to me, says that we've completely lost it with this rally. And yeah, I'm probably going pretty counter trend here because a lot of people are looking at this declining volume, as a lack of conviction to the upside. But let's ask ourselves, what is the real force, in the market that's causing corn to rally here? You could weigh in and make an argument for South American weather. You can pick any news headline you want, but the truth is that over the last, several months, this market has had everything bearish thrown at it, from, massive South American production numbers to now really big acreage reports in the U.S. To bad exports out of the U.S., which also you can make an argument there because of what you're seeing on the international export scene. But still, point being is that, right, there was a reason the market sold off. Whether it was headline related or it was the funds selling into it, it doesn't matter. We sold off. The fund position grew in the sell-off, and we respected a downtrend, right? There's downward sloping trend lines. There's the 18-day and the 7-day moving average on the way down that we found as resistance, right? Last week, that script changed. We traded above those levels. We actually traded through them with volume. You can see here in the May corn, a significant volume bump on the 7th and 8th there. Not quite doubling the daily volume from a few days prior, but, going up to almost 200,000 contracts trading in a day from 115, 120. That's significant. And doing so while you're pushing through trendline resistance, 18-day moving averages, trading above these levels and holding above. Okay, that's something to talk about that hasn't been true, since, oh gosh, you got to go back to last year, right? So something changed this last week. A lot of things that weren't true for the first part of this year have now changed and now are. And we find ourselves in a little bit of a channel and trading higher. We're definitely overbought in the RSI on the daily indicator. I wouldn't say you're overbought on, other market internals because, funds are still technically short. That short position's still coming out. And by the way, on the way up here, the reason I don't see this declining volume since the low as necessarily bearish, it's because it's not representative of a lot of shorts getting out of this market. If we saw the spike higher and big volume really quickly, that'd be very indicative of that fund short covering, getting out, and we could make a case for a very sharp dead cat bounce and a bear market bounce, if you will. But that's where this tempered, very actually technical reversal seems a little different. And I'm not making the bull case saying we're going to $7 corn here. I'm just saying whatever was true that took us down to start this year, it's really hard to make a case that those things are still true. That's we'll leave that at that. Needless to say, it's higher highs and higher lows here today for, the last week or so since we broke out of this tight wedge above the 18-day and 7-day moving average. 18-day there is the red line. 7 days the white line. Those are some short-term trend indicators I use to try to help discern what we might be doing intraday. And then we take a step out and we look at where those bigger time frame indicators are, like the 55-day moving average still above us in May corn at 451 and 3/4, 472 for that 100-day, and all the way up at 501 is that 200-day moving average. It seems like a lifetime away, but we're going to try to make the case here today of how and why those profit objectives, to the upside aren't necessarily that far stretched, even though there's going to take a lot of work to get there, right? We got to make the case for everything. Just like, hey, we got to make the case for where the resistance zones and places that this market could roll over is right here and now one. Are we closing in on something? Is old support here back in early January, that we finally broke below. We've capitulated, and now we're coming back up to that old supportive area around 450. And hey, it aligns with that 55-day moving average and the upper bounds of an upward sloping channel. So, okay, there's a case to be made for some short-term resistance. Certainly volume has been declining in the near term, and we're overbought in the daily RSI. Corn might be due for a pullback, and I think that's a healthy thing to say in this market. And by the way, some of those levels to the downside, 428 now, that 18-day moving average, which has held the support now for the last week every time it's been tested, if it's hasn't even really gotten down there for the last 48 hours, but still. If it does get down there, I don't think it's an unhealthy pullback in this type of uptrend. So I'm not too overly concerned if we see one of those kind of pullbacks here at the Ides of March. But what will be important is that support does hold, right? You don't start to give back below 430, below the old trend lines that are starting to now hold and prove the trend to the upside. Some of them in the short term are going to get played with as we proved we want to be above them and naturally trade towards much bigger levels, right? Which, hey, if you were a producer, you got to give us a call over here, 312-277-0110. Talk to us about some of the strategies we're using to plan for the sales to the upside here, because if this is like a repeat of 2014, like we've been talking about for some time, and finally have the bottom, that we can talk about, the reversal from, we had to wait for that to be proven to us, and that's certainly proven. We can talk about that reownership to the upside if that's, a part of your strategy, or really more importantly, how do you structure those sales over the next couple weeks to month and take advantage of this pricing rally, which if it's like 2014, maybe some of the best pricing you can get done for, multiple years. And we're going to keep an eye on that. So down $0.015 now, still kind of flirting around unchanged, right? And flagging the day up here for the corn. Going to continue to probably expect that to happen. So in the very near term, we've been watching it go above, trend lines, pull back, trust Tatum as a support, kind of break through them, and stair step higher. That stair stepping process can kind of also be defined here by a pattern, right? 2 steps forward, 1 step back, being a 50% retracement that occurred, in the range that basically happened from the 28th of February through the start of March, right? We then broke out of that range, old trend lines, in that 18-day around the 430 area. So this was a big volume breakout. We've pulled back, tested support for the day, went to new highs, tested support for the day, went to new highs. The market has just been making higher highs and higher lows. Every pullback's been bought since that breakout. That's not bearish to me. This has all the indications of, hey, pay attention to the trend train, flipping from the bear, changing directions altogether. 2 steps forward, 1 step back has taken the market up towards, upside targets in that 440 to 448 area. Next to the series happens to be lows of the month from 422. Fib draw up to the 445 high, 50% retracement in this pattern of 2 steps forward, 1 step back, 2 steps forward, 1 step back, is they pull back to 433 half. So not necessarily saying we're going there, but if we do, hey, lots of technicals in that 433 to 430 area now as support, as corn has climbed back above it. Next in the series 50% level, we can draw up trendline support against the lows that would come in around that level. Here's that trend line now. You can see it here. There it is. Comes in right around that level too. So interesting to see if it wants to come down, and just kind of the ebb and flow of price action higher. And honestly, a pattern of price discovery up now. And if that pattern continues, you got footsteps in the sand, trading higher for corn. And I think that's pretty important in this point to pay attention to. 408.75 lows, the contract low here for May corn up to the 445 high after. 426 is the full 50 back. Could it pull back? Sure. It's a test back to the old range that we were consolidating in and broke out of. I guess the long story short here is, until we really trade into the 452 area, I don't see much in the way of real resistance that corn is touching just yet. And I still think it's trading higher. And today, a day like today, seems more like an opportunity for those that are still wishing to get on the trend than those looking to fade it, in my humble opinion. Okay. But again, don't be anytime corn makes a new high for the day, week, and month all at the same time, which it did today at 445, it's almost like alarm bells go off in my head that, hey, 5 or 10 cent pullback can always happen. And, we're still early in a trend. And if this trend takes you to $5 in corn, I mean, it's got a long ways to still go, in a couple weeks and maybe even a month to do it. I do want to point out before we move on to the beans, I want to take a quick look at December corn because there is this open gap above us at 503 that I'm, I can't decide if it's going to correlate with 480 old crop or 540 old crop. We'll see how we behave to the upside. So far, we seem to be bull spreading a little bit, so I kind of favor a little bit of inversion and taking some carry out of this market. But nevertheless, watching December corn on the way back up to fill that gap is kind of that one of those, hey, where do we think December corn can get to? I think 503 is a likely magnet for this chart. And okay, it may not even get there, but they're, in my humble opinion, having broken out of this consolidative range in December 24 corn below that $5 mark, capitulated now, seen a bit of a reversal. We should go back up to test, 486 to $5, old broken support right now as resistance. Even if this market, wants to go lower. So getting back up towards that $4.90 to $5 area with an open gap at 503 just seems like now that the script has turned on the volume, the daily, the breadth, the funds are covering, et cetera, it seems like that's a logical place to begin thinking about, serious resistance. And certainly a producer should think about some serious sales as we approach there if we haven't done so already. All right, May beans today looking a little bit better than the corn, still up 9.5 cents right now in the May contract, 11.89 even last. Similar channel off the lows so far for that May bean, breaking out last week of the 18-day and downward sloping trend lines. Again, similar volume push. Last few days we've seen declining volumes with RSI go overbought. That's where in the short term, right, that makes me worried that there might be a pullback. But in the long term, I still think it's a pullback to buy because I'm not convinced in the volume we've had onto the upside here that it's been enough, of that short covering to really get the funds out in a sizable way to think that that isn't still rocket fuel if the market wants to cover further, right? And again, I come back to if we traded from 1309 down to 1127 on that fund short, building into the market and pressing, well, as it comes out, just all things being equal, right, it could take you back to that level if there aren't, new sellers that are going to replace them. It's kind of not a perfect science, but certainly has validity into how you think about, right, the forces that interact in a market. And that's all assuming that we don't also have some other buying going on the way back up that's driving this market higher. And I'm not so convinced there aren't other players that have used this opportunity, right, to get some purchasing done, particularly export partners in China. They may not be buying the physical, but if they have the opportunity to buy the board, they can buy the physical all they want later at a higher price because they've laid in their hedges in the futures market. That's just, if I was China or a major buyer of U.S. grain, that's what I would do. It seems like a pretty simple game to play when an opportunity like this presents itself. A $2 decline in the price of soybeans, for example, in the first quarter of a year. That's a rather bit of a gift for those that need them. So the 7-day and the 18-day moving average have also, crossed over. That was something else I had mentioned. That's something that has not been true in the beans since last November, last November. So huge. Again, one of those things where why is it different right now? Because there's things that have happened that haven't happened in half a year, and certainly since, the start of 2024 for the first quarter here, both corn and beans have been in a undeniable bear trend that now we finally actually have a case to be made for how that has broken. And now we're actually in an uptrend and regressing that. To the upside, We are banging into a old downward sloping trend line that is like kind of continuation from last year here around 11.92 into $12. $12 obviously very psychological for soybeans. Also, the upward sloping trend channel is got its upward bounds around here. So, okay, maybe without a significant breakout, you might be hitting the upper bounds of what a short-term move in the beans might need, and a pullback to that 7-day or 18-day or down into channel and trendline support wouldn't be out of the question. That'd be a pullback towards 11.60 at this point. Seems like a long way off, but beans are playing in 20-cent ranges per day and have now, a 60-cent range off of their lows to almost 70-cent range off their lows to talk about. So that's something that's changed. There's plenty of levels to the upside. The 55-day moving average coming in here around 12.18, 12.15. So just above that $12 mark. You see similar levels that around the start of February, that were support and resistance. A little bit of, fight over the trend there happened. And okay, there might be a little bit of inflection here as we go back up around that area. But then above, again, that 100-day and 200-day are so far above 1280 and 1304 respectively, aligning with where that gap fill area is on the chart. They're so far away, it's hard to talk about. I mean, it's $1 away still in the beans, but as we trade higher, and certainly the nature of what looks like a V-shaped recovery begins, there's no reason to think that you can't get there. But anything above, I think we'd need a serious change in the narrative in what we're seeing in not only weather, but expectations for production of next year and balance sheets, to take us significantly higher. But if we're just talking about the forces that brought us down from those levels, the big fund short that built into the market, if all things are pretty much the same over the last 3 months, because what's really changed, right? Other than maybe South American weather getting worse, the funds covering could easily take you back up there. And again, we've gone over a few levels on the way back up that the market might be interested in and finding and selling off from, but for the time being, it does seem like the writing is on the wall and the bulls are back in control of the chart. In the near term, similar 50% levels that we looked at on the corn there. Actually, did we look at those? I looked at them on the way up. I apologize. Let me look at them real quickly. 50% from the swing highs to lows for the corn, all the way up at 520 in the May corn. That's a long ways off. A continuation short, though, around that 450 area. Hence, another area of 50% retracement area that could occur in the market if it hits. That's the level, so to speak, that you could roll over and head below 4 in a hurry. But we'll see. Kind of when we get there. Anyway. Soybeans, similarly, 12.14. That's basically the gap fill, or the open gap to lows now, which that gap around $13. It's the highs of the year. 50% retracement short for the year is around 12.15 for May beans. So that's just halfway back for the year, and it's still 25 cents higher. So we got room, in my opinion. You got room to the upside still, even if it's only 20 cents. It seems like we trade into a level like that before heading lower, but I don't know. Been wrong for most this year in a sense that we were expecting a bottom to form earlier in the seasonal cycle. Well, it's finally happened. It's just like we said, it's just how far down the rabbit hole the market needs to go before setting that window. 14.19 high, 75 high to the lows after 11.28. That full 50% area is around 12.78. 1274, excuse me. I don't see much else, right there. A little bit higher, around 1295 is like the old lows from the range, from last summer that we were holding in. And I think that's a technically significant area, but that aligns with the gap fill up there. So around 13, it's like if you go all the way back to 1274, why not go in the extra 20 cents to see if you test 13? It would be really shocking if it didn't at that point. I mean, but then again, that could also be exactly how this turns very, 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 very bearish from a technical standpoint after that, when you fail to even get there. However, I'm trying to be as pragmatic as possible in that, right? if you're genuinely wanting to sell this market in a bigger swing, where would those levels be? And they're still kind of above us, because the short-term levels that you'd want to be a seller at, these old trend lines, the old 18-day moving average that we broke above, those were working until they weren't here the first week of March, and then everything changed. So we'll see what happens here until the end of the day. Still down 1.50 in the March corn, up 11 cents in the May beans. I guess just to take a look at it for good measure, before we completely end today, let's look at that Novi soybean chart real quick, because they are, have an open gap way up there at 1244, but they have traded back into their 50% for the year, right? 1237 highs to lows. That Novi bean chart is already into 1180 at its 50%. They take out the 61.8 line up at 1193. So if we go back to $12, which is actually the highs for February for November beans, if we go back to, and market just technically needs to print now 1199 and a quarter. I believe that's the highs here for the month of, that's the high of 1199. So if we get to 1199 and a quarter in the November beans here in the month of March, it'll be higher highs and higher lows than February. So not that far off, certainly closer to doing that than you are the lows. Again, 50% short from that gap fill, not getting much love or reaction right now. Kind of makes me believe that, okay, the full 50 back from the 1320 highs to lows might come into play. And guess what? That 1220 to 1240 kind of 50 to 61.8 level, it aligns with where that open gap is. So I like that more as for the bigger swing for where November beans could probably get up to. It aligns with these old lows and the old ranges. I don't know. And the 200 and 100-day moving averages on the chart just seems to me that is a logical upside, projection. Going above there, I think would be a gift. Heck, getting there is a gift at this point. But my point is that as we approach those levels, I think that you have to make a shift. You got to shift, even if the chart is still saying short-term bullish. And particularly if you're a producer, you got to think about getting some sales done and taking opportunities where it weren't, earlier this year. Because there's plenty of other ways we can talk about reowning this chart. If November beans wants to continue higher from there, okay, well 1320. That's where you start thinking about calls to the upside. Because hey, if we're going to really go, right? And you're going to go to, you don't want to miss out on the $13 to $16 range if it really goes, right? But yeah, so just how this marketing analyst is thinking about the rally, how to try to take advantage of it, right? Because if we're not, are we really marketing our grain? And I guess we'll leave it with that. So with all that being said, have a great day, everybody. Check us out here over at Zaner, 312-277-0110. Numbers up on the screen there. Shoot me an email. Find me on Facebook, Twitter. We always are here for the conversation and to help you make the right decisions with your marketing plan. Have a great day, everybody, and we'll be back with you as price action develops.